Hi friends, welcome to our official channel. As you all know that we have started a completely free course for EPFO examination, and we have covered a single video on accounting, and this will be the second part of the video or second lecturer on accounting. So before proceeding, we will be covering some of the past things that we have covered in the lecturer 1 so that it will be a kind of revision for you. What exactly was accounting? Accounting definition. Accounting is the process of recording, summarizing financial information in a useful way. What was that useful way? That is nothing but we will be providing some of the information to the management level so that this management will take the perfect decisions that are required for the factory or any of the organization. Fine. This was the simple definition of accounting. Then, in accounting, there are two parts. One is bookkeeping and second is analysis. What does accounting gives for us? It gives information on. Accounting gives the information on what? On information of which things? It gives information on the resources that are available in an organization, how the available resources have been employed. If at all you have hired two of the persons, and if you have hired these two persons, one for manufacturing or in the production line and one for the testing line, the accounting will measure. If you have hired two persons, then these two persons have been employed to their respective roles, or if at all they have been used for the other purpose. This will be analyzed by the accounting. Therefore, this is how the available resources have been employed. This will be calculated by accounting. Then the third information that the accounting provides is the results that have been achieved by their use. If at all you have employed two employees, then what was the profit that you have gained from those employees? If at all you are paying 10,000 rupees and you have gained 8,000, then you are lost, right? If at all you have gained 30,000, then you are obviously in the profit because you pay 20,000 to the employees and 10,000 will be your profit. Accounting as a discipline, we have seen this in the past lecture, but we will be revising this. Accounting as a discipline, it records, it classifies, it summarizes and interprets financial information about the activities of an enterprise so that intelligent decisions can be made. This is important, so that intelligent decisions can be made about the enterprise. That is, accounting leads to the intelligent decisions of the organization because this accounting will provide the financial information that is necessary for the management in order to take the particular decision, and this is the accounting that helps them to take the perfect decisions. Now we will be starting this lecture, as these are the some of the basic points that we need to revise. Then now we will go on seeing what are the characteristics of accounting. What exactly are the characteristics of accounting? First character is identification of financial transaction and events. What were the financial transactions and when did they happen? This will be calculated or this will be noted in the accounting. Second is measuring the identified transactions. If at all, see, you have in a factory, if you are running a factory and in this factory you have bought a machine. Just imagine that you have bought a machine and this machine have cost you 20 lakhs rupees. Fine. Then this will be accounted as a financial. This will be accounted as the financial that you have, the organization has put on the machine. Fine. Then measuring the identified transactions. What you have measured, this 20 lakh rupees, it is this point. That is, you have measured that 20 lakh rupees has been invested on the machine. Next, this is recording. You have recorded, there is a book, and in this book you have recorded that 20 lakh has been withdrawn from the companies and it has put on the machine. Fine. This is nothing but recording. Then classifying. What is classifying? That is, if at all you have bought a machine, fine, in a factory you have bought a machine, it will lead to the income of the company for the next upcoming future, right? But if at all you have given a party or you have given a sum of the bonus to the employees, it will not be returning for you. Therefore, there is a classification that it is a profit for the company or it is a loss for the company. This is nothing but the classification. Then summarizing. What exactly is summarizing? We will deal with it in the further sessions. Then analyzing and interpretation and communicating. What is communicating? If at all you have done complete accounting, then you have to communicate this to the management level. Right. This path is nothing but communication. Fine. This path is nothing but communication. Next, what are functions of accounting? Now we have seen the characteristics of accounting. Now we will see what are exact functions of accounting. First function is maintaining the systematic accounting record. Maintaining the systematic accounting record. We will find out exactly what it is with an example. Just imagine that you are running a cotton shop or a ready-made clothes shop, fine, and you are the owner. Now you have purchased a lot of 20 clothes, fine, you have purchased a lot of 20 clothes, okay, and within a season or within a short span of time you will sell complete 19 clothes, okay. What is the remaining? One is remaining. Now what is the function? Maintaining systematic accounting records. What you have purchased? See, there is a book of accounts. In this book of account you will mention what was exactly purchased and what was exactly sold and what is your profit. Fine. If you have purchased this 20 cloths and you have sold 19 cloths, then there is a gap of one cloth. This complete recording or maintaining the systematic accounting record, this is a function of accounting. Next, second, preparation of financial statement, okay. This was maintaining a systematic accounting record. The second function is preparation of financial statement. What is financial statement? Now just imagine that you have bought this 20 cloths for 100 rupees, fine, and you have sold these 19 cloths for 120 rupees, fine. Now these are in financial statement, this 100 rupees and 120 rupees, okay. Mentioning these in accounting is nothing but you are mentioning or preparation of financial statement, and this is the second function of accounting. Now we will see the third function, that is maintaining legal requirement, meeting the legal requirement. If at all you are running an organization, then you are under the guidelines of the government of India or government of any other state, okay, and there will be certain guidelines. Some of the guidelines will be like maintaining the particular accounts, maintaining it in a systematic format, and maintaining it in a format that is required for the government auditing, okay. And this maintenance is nothing but you are meeting the legal requirements that have been stated by the any of the government authority, fine. Next, the fourth function is communicating financial information. To whom you will be communicating financial information? It either may be the consumer, it either may be your supplier, okay, it either may be your business management team, or it may be your partner, okay. You will be communicating what you have recorded, this information, and it will be communicated to these factors. Next, assistance to management. What is assistant to management? Assistance to management, it is nothing but you are helping the management in order to take the decisions by providing the accounting information, fine. Next, what are the external users of accounting information? In the previous lecture we have seen what are external users and internal users, fine. Now we will briefly see what are and who are those external and who are those internal, okay. Just a minute, there is a very beautiful diagram here or flowchart. Users of accounting information. Who are the users of accounting information? One is internal user and the second is external user. Who are internal users? Internal user may be owners, that is they have their own shares in that company or they own the company. And second is managers. These may be the employees that you have appointed as a managers, or you may act as a manager in the company. And the third is employees, because employees are working for the organization and they are within the organization, therefore they are internal users, fine. Now we will see who are external users. It may be investors. He may be investor, that is in the company of 100 crores he may have invested 1 crore, therefore he is the investor of the company. Next, who are lenders? Lenders are also external users. Lenders are nothing but those, for example, if you are running an organization and you have taken a loan of 100 crores from any of the bank, then that bank is a lender, and that is the external. That is, in this, the bank is a lender and he requires information. This accounting information should be provided for the banks, that is lenders. Then suppliers. Who are suppliers? If at all you are running a steel factory or steel manufacturing company, then the raw material that is provided will act as a supplier for you. In order to provide supply on credit, he will ask the accounting information. Then this information should be provided to the supplier. The customers are also external users. Then the tax authorities, government, auditors, public, these all are the external users, and the accounting information should be communicated with all these external users. Hope you understood who are internal users and who are external users. Now we will see what are the limitations of accounting. Of course, accounting is done in a particular way in order to meet legal requirements, but there are some of the limitations of accounting. What are those? Accounting is not fully exact. Accounting is not fully exact because there are many of the things that will not be noted in the accounting. Because see, accounting is nothing but it should be in the financial matters. Okay, it should be in financial matters. But if at all you are hiring a HR, right, if at all you are hiring HR, then he is not a financial, and this hiring of HR will not be accounted in your accounting books. Therefore, it is not exactly or fully exact that you are accounting the complete details of your company. Then the second limitation is it is unrealistic information. It is unrealistic information. We will try to understand how it is unrealistic information. Just imagine that you have bought a book. Just imagine that you have bought a book on credit. That is, there is a credit of 100 rupees. But if at all you have bought this book, then it will be entered into your assets that you have bought a book of 100 rupees. But if this amount is on credit, but the amount that is to be paid is not written in the accounting, right? The amount that is to be paid is not written in the accounting, but it is written in assets. Therefore, it will be unrealistic that you assume that you have 100 rupees, but actually you should pay 100 rupees. This is unrealistic information that the accounting will lead to. If you have any doubt on this, please comment. We will try to answer your questions. Next, the third limitation is accounting ignores the qualitative elements. This is important. It will only measure quantitative elements. That is, it will measure 100 cloths that you have brought. It will measure 200 cloths that you have brought, but it will not measure what is the quality of these 100 cloths and what is the quality of these 200 cloths. This is very important. In order to accounting, you will measure it only in the form of quantitative and not in the form of qualitative. This is one of the limitations of accounting. Then the accounting ignores the effect of price level changes. Accounting will ignore the effect of price level changes. Do listen these sentences because these are very useful for examinations. It will neglect or it will not consider the price level changes. Just imagine that you have brought a machine for 20 lakh rupees in 2010. Okay, in 2010. At that time, the cost was 20 lakh rupees. And in the present situation, that is in present 2021, its cost in present 2021, its cost may be 40 lakh. But in your accounting book, you will mention it as only 20 lakhs because in accounting, the price that you have brought, the original price that you have brought, it should be mentioned. Not the inflation will not be considered. Okay. So the effect of price changes will not be considered in accounting. Okay, and this will also lead to unrealistic information. Fine, you have understood. And if at all you have brought a machine for 20 lakh and it is mentioned as 20 lakh assets in your company's accounting, but in the present situation, that is 2021, if that machine cost has reduced to 12 lakh rupees, okay, there is a loss of 8 lakh, but in your accounting book it will not be shown as 12 lakh rupees, it will be shown as 20 lakh rupees itself. Okay, it will be shown as 20 lakh rupees itself. Therefore, you are in the loss of 8 lakh, although you are showing that it is 20 lakh. Therefore, this price level changes is not considered. Therefore, it will lead to unrealistic information. Fine. Next, What are the limitation? Again, what is the limitation of accounting? The final limitation is accounting may lead to window dressing. What is window dressing? Accounting may lead to window dressing. What I said, you have brought 20 lakh rupees machine, but the present price is 12 lakh rupees. There is a window dressing of 8 lakh rupees. You are in loss of 8 lakh rupees, but you are mentioning it as 20 lakh rupees. That means you are window dressing your loss. Okay. Next, there are some of the branches of accounting. We will deal what are the branches of accounting. First branch is financial accounting and second is cost accounting. There are many. We will deal one by one. Financial accounting. The most important branch of accounting, it is financial accounting. It is concerned with the recording, classifying, summarizing and analyzing of business transactions. Okay, what is financial accounting? It is one of the important branch of accounting. It is concerned with recording, classifying, summarizing and analyzing of business transactions. Okay, if at all there is any business transactions, it will, the accounting, that is financial accounting, will record it. What was the transactions, that is on which date the transaction has happened. It will classify, is it an asset or is it an liability. Then it will summarize all these things and it will analyze in respect of business. Okay, it is directed towards the preparation of profit and loss account. Okay, if at all you have brought for 20 rupees and you have sold for 21 rupees, then there is a profit of 1 rupees. It will be mentioned in financial accounts. Okay, but if at all you have brought for 20 rupees and you have sold it for 19 rupees, then you are also loss at 1 rupees. It is also mentioned in financial accounting. Next, cost accounting. What is cost accounting? In financial accounting, you will consider the whole amount. That is, if you have buy 20 books, then you will consider the amount of 20 books. But in the cost accounting, you will count or you will measure the cost of each single book. Okay, see, cost accounting is the process of accounting of costs. It is a systematic procedure for determining the unit cost. Okay, in this you will determine the unit cost. See, if at all you have brought 20 books, if at all you have brought 20 books for 20 rupees, this is financial accounting. But measuring it for one unit, that is, if at all you have brought 20 books for 20 rupees, then one book cost is 1 rupee. Okay, and this is nothing but cost accounting. Okay, this is nothing but cost accounting. Then we will move to management accounting. What is management accounting? Management accounting is concerned with supply of information which is useful to management in decision making. This is the definition that we have dealt in accounting, but this in particular it is management accounting. Financial accounting is overall accounting of the finance. Cost accounting is the per unit cost accounting. Then management accounting is supply of information. You are providing information to the management in order to take a particular decisions. Then we will move to system of accounting. What is system of accounting? There are two systems of accounting. One is double entry system and single entry system. This concept is very important, as in the previous year 2017 EPFO examination there was a question on this concept, that is system of accounting. One is double entry system and single entry system. What is double entry system? Both debit and credit aspects of the accounting are recorded. This is important. Both debit and credit of the accounting are recorded. We will try to understand with the real time or real life example of your own itself. Just imagine that you have a savings bank account, although everyone will be having a savings bank account. Okay, and you have been provided with an ATM card. Okay, now what is double entry? We will try to understand it. What is double entry? You went to a bank and you deposited 20 rupees. Okay, that is asset for you because you have deposited 20 rupees. In the accounting book, this 20 rupees, here there will be credit and here there will be debit. Okay, here there will be debit. In the credit, you will be recorded as 20 rupees because it has been credited to your account, and it is asset for you. And with your help of ATM card, you go to ATM, okay, and you will withdraw 10 rupees and it will be recorded here 10 rupees as a debit because you have withdrawn from your bank account. And this entry system, that is recording both credit as well as debit, is nothing but double entry system. This is very simple example that can be understood for this. Now we will move to single entry system. What is single entry system? All transactions are not recorded on double entry system. Okay. In this, what will happen? The same example, you have deposited 20 rupees in your savings account and you have withdrawn 10 rupees from your ATM. But here what will happen in this balance sheet or accounting, there will be no two columns. There will only one single column will be there, and here 20 rupees is credited, okay, and 10 rupees is debited. This is nothing but single entry. There is no two columns. There will be no credit and no debit. But in this single page, you are getting credit as well as debit. This is single entry system. Hope you have understood. Next, there are few terms that we need to by heart or we need to understand from the examination point of view. These are nothing but basic accounting terms. Okay, basic accounting terms. First is account capital, what are drawings, what are liabilities. There will be two types of liabilities, internal liability and external liability. And what is asset, what is account, what are drawings, what are liabilities, and some of the others. Okay, in the upcoming future lecturer, we will be discussing all these concepts or basic accounting terms. Do watch these videos twice or thrice because it will be a revision for you, and do make notes. If at all you want the PDF of this, join the Telegram channel. The link has been provided in descriptions, and if you have not watched the previous videos, do watch them from the playlist. Subscribe the channel and share the channel, as well as press the bell icon for getting the notifications. Thank you for watching the video. Bye.